if you pump more oil out and bring more supply to market, it moves prices lower. If you take it offline, supply lack of makes prices go higher. What exactly are we to take away from this? Is OPEC Plus going to do something at its December 4th meeting?
And that's why I stuck with commodities in my career, Dom. You know, more supply, lower prices, less supply, higher prices. Look, the dip yesterday obviously got the Saudis' attention. The move of WTI below $80 is something that they have a line in the sand in. More importantly, for Brent, it's around 85. It was a bizarre turn of events yesterday, mostly because OPEC Plus had just engineered a supply cut or a quota cut, not just 3 or 4 weeks ago now at this point. So, the market was caught off guard by the alleged turnaround in policy, and then obviously had the whiplash back up higher when it became clear that that wasn't the case. However, last month, the Saudis actually pumped more oil than they did the previous month. So it's a bit of a confused state of affairs here with all the producers. Obviously, the situation, with Russia is the big 500-pound gorilla in the room here, mostly because we are facing a supply cliff finally, potentially, from Russia when the EU embargo, for lack of a better word, kicks in here on December 5th, which is only now a week or two away. And the market could finally lose meaningful amounts of Russian crude oil and refined products. That hasn't been the case so far since the war started with Ukraine. It could finally begin to bite here in December, obviously, which is the peak demand period, the Northern Hemisphere winter, which would make the lost Russian barrels really a factor in getting prices in rally mode. It's what we're all sort of holding our breath for. It's the parade of horribles when people talk about triple-digit oil again. But we've so far been able to skirt the worst-case scenario. Consumers have been very lucky. The setup for the winter is going to be a moderate sort of winter, the way the atmospherics are looking. So we still may be lucky, but the true test is coming here in a couple of weeks for consumers around the world.
So you bring up an excellent point here. The demand dynamic of supply, they can jawbone all they want about supply, but what about demand? That's becoming a little clearer now, especially if China starts to lock down again because of COVID. Is that going to put pressure on prices?
Very much so, Dom. And I'll tell you, the signaling, as we saw yesterday, is very important. You signal that you're going to be tight with supply, obviously prices will go up, otherwise down. But no, on the flip side of everything I just said, China is as important on the demand side of the price equation as Saudi Arabia, Russia, OPEC Plus is on the supply side. And this COVID situation in China has actually just recently gone off the rails. The number of cases is spiking. Beijing may go into a full lockdown across the entire city. Only right now part of it is. Other key sectors of China are in lockdown already. It's hurting their economy. It's been hurting their economy. And their economy, China's economy, has already been problematic with or without COVID.
Sure.
The property sector, for example, in particular, GDP there, nothing like it was. So again, consumers outside of China lucky because we're not being, squeezed by their demand, is facing this, situation that is keeping a lid on prices because of the COVID situation in China. Very, very much so.